Debtors Age Analysis. The Debtor Age Analysis is a useful tool to manage your outstanding debts and to see which debtors are not performing according to your credit agreements. It displays a breakdown of your debtor account balances for each of the specified periods for a selected debtor account, or a range of selected debtor accounts. You need to analyze the outstanding amounts your debtors owe you in periods such as current, 30, 60, and more than 90 days. The Debtors Age Analysis is essential for credit control. If you allow your debtors to pay you when they wish, you might develop some serious cash flow problems. If you are registered for VAT on the invoice basis, outstanding amounts that include VAT may have an impact on your cash flow, as you may have to pay the VAT to SARS irrespective of whether the money has been received or not. How to prepare the Debtors Age Analysis. Balances 3/4 always commence the calculation with the closing balance of the previous month. 3/4, for example, if the information provided is as from the month of May, then commence the calculation with the closing balance in April instead of the opening balance in May in order to determine the age analysis accurately. Total debits 3/4 total debits figures for each month must be recorded horizontally in the respective columns. The figures are represented in the same row as the balance from the previous month. 3/4 total debits for a particular month would include the following: total credit sales for a particular month, interest charged for a particular month, cancellation of checks during a particular month. 63. Cancellation of discounts during a particular month. Any other debits to the debtor during a particular month. These amounts can be added to the credit sales for that month. See examples provided. Payments. 3/4 itemize each transaction vertically in the month column, ensuring that each transaction is recorded separately and independently of the other transactions. 3/4 the oldest invoices/accounts are paid/offset first. 3/4 the more recent invoices/accounts are paid/offset progressively. 3/4 payments received could include discounts, or 3/4 discounts could be separated. Returns. 3/4 show the returns and allowances in the month in which the returns, or allowances, was made, and not in the month in which the sales was done. See example 1. Reason 3/4 in order to avoid showing negative balances in those months where the accounts had probably been settled already. Purpose of preparing Debtors Age Analysis. Decision making. Note that with credit sales additional costs are incurred. I.R.O. 3/4 administration costs in keeping records of debtors' outstanding accounts. 3/4 costs of sending monthly statements and reminders, postage, telephone, etc. 3/4 interest is forfeited on money owed to the business. 3/4 the risk of bad debts. Therefore, develop a credit policy that incorporates control procedures too. 64. 3/4 investigate the creditworthiness of new customer. 3/4 investigate the creditworthiness of existing customers on a continuous basis. 3/4 specify credit terms. 3/4 specify settlements discounts to encourage prompt payment of accounts. 3/4 increase the odds of selling only to those who will settle their debts on time. Ensure that 3/4 that the debt collection policy is effectively managed. 3/4 that debtors paying within the prescribed period, what % of debtors are overdue. 3/4 that the necessary steps are taken against delinquent debtors. Reminder, final notices, summonses must be issued or even hand over debtors to debt collectors. Every receivable account is examined carefully on the basis of the available information, e.g. period outstanding, dispute in connections with the account, insolvency of the debtor, and so forth. Although there is no accurate indication of which debts will be irrecoverable at year-end, a provision for bad debts should nevertheless be made.